Hello people. Right, I want to talk about end of day reversals. Probably they won't happen every day. I haven't done any stats on this at all. This is off the cuff, literally. I was wondering what to do a video about. I want to do at least one a day, 7 days a week. Hopefully being helpful to you. But it occurred to me that the end of day reversals, when they happen, are quite reliable, very reliable in fact, and a very relaxing way to trade, because literally you could just open your charts at say 3 or 4 in the afternoon, have a look at the ADR, see that it's quite over extended. In fact, we need to do this for a 5-day ADR to be more up to date. So 5 days in a week, so some like 4, some like 6, we'll go for 5. So 126, 171. So we're well above the average daily range when we're down here, and when you get a trigger for a reversal, you wouldn't want to be looking at this point here, because you wouldn't have been over your daily range. Hope that makes sense. So the new day, we'll put that in, started here, and as you can see it just reversed on this great big move up here, well, this whole move here, the previous day. So what I look for is a change of colour on M30 is probably the best for 2 reasons. If you wait for M1, you've probably missed most of the move. Sorry, H1. By the time the colour changes, in this instance it wasn't the case, but we got in at that level there, whereas if we'd used M30, we would have been looking at a potential trade at this point here. So then how do we enter that trade? Right, well, we start drawing our levels. We might as well put H4 on this as well. So I just need to pause this for a moment. Sorry, there's someone at the door. Right, yeah, we need to really start marking our levels in of anything that might affect the price or might be a potential target. So that H4 level there, support, will get tested potentially as resistance on H4. We can dump this for the moment. Yeah, we're not interested in this candle because that happened after our potential reversal, and we're looking for longs, so we're not interested in anything else. This resistance potentially would cause a problem because it's significant level for whatever reason. And that's about all we need worry about on that particular chart. So H1, we do the same. High there. There's nothing to worry about inside here. That's why it's always nice if you've got a big bar to trade against when you're going down or up. Then these ones are the only ones that will potentially matter. We might as well put an H1 up there as well, bearing in mind we are at this point here, so we can't see any of what's gone on there. Stick something on that high there. Whoops, not that high. because course that is to the left of us when we were considering entering the trade. M30. So we know this is our current bar. Because we wouldn't even be looking at this as this hadn't closed green. And M30 we need to do the same now. And this potentially will cause a problem here. Support acting as resistance. Always remember, we are scalpers, or I'm a scalper, and that's what I recommend this method for. Can be traded on the big long-term charts, of course, and it works the same. You just, instead of going down from a 1 hour to or a 4 hour to a 5 minute, 1 minute chart, you're going down from a monthly, weekly to say a 4 hour chart, and using the hourly for entries, say for example, instead of the 1 minute. So we can clearly see now we've got a fantastic gap between these two levels on this M15 chart. What we want to see, if possible, is a confirmation on the M15. That would be this one here: high, low, lower high, lower low. Because they don't happen very often. Look how infrequently we had a confirmation here. If this would reverse, we would have had to close above there. If this one would reverse, we'd had to close above there. We didn't. If this reversed, we would have had to close above there. We didn't. This one reverse, we'd have to close above this one, I think. High, low, lower, high, lower, low. We didn't. Finally, we do get a reversal here. So this is why I love this method, guys. Because the reversals don't happen that often. We had one here, and look what happened, the price went up. High, low, lower high, lower low. Draw a line on the red high there, close above it, either there or there, and price continues up. Price has crossed over zero on the RSI histo alert as well, which it hasn't done all of here, and then it crosses over zero here, and what happens? So you just wait patiently. You know, add these tools to your toolbox. They are absolute blinders. I've always said, and I don't say this enough in my videos, never go below an M15 chart reversal, really. So you know, this is panned out again. That's one of my sort of rules. You know, you can scalp 5 minutes, but I don't recommend it. 5 minute reversals I'm talking about. You will get taken into many false moves. So we've closed above with this candle here. Above that, high, low, lower high, lower low. That's the reversal. That candle there. So we can drop down to the 5 minute now. And when I talk about using trends within trends, that's what we're doing. We're using a 5 minute reversal, potentially, to get into a 15 minute reversal. Okay? And then ultimately a 1 minute reversal to get into the 5 minute reversal to get into the 15 minute reversal. So the 15 minute high was this one here. We closed above it with that candle there. I'll just double check, sometimes these don't move right. That's it. So then we've had a pullback as a result of that that close, which I always say happens, and you wait for, because how do you know whether you're going to get into the right direction? If this pulls back too far and reverses on itself, in other words a reversal downwards on the 5 minute chart, then the long is over. That's why you wait for a pullback. 1 minute chart, Here's your pullback, so you've confirmed to the downside. You've not confirmed to the long side. You would have had to have closed above that candle there. Once again, you've confirmed to the downside, so you always check now because we're running into quite a few minutes. Check you haven't confirmed to the downside on the 5 minute, which you didn't. So then we can move this across, keep moving across. Remember, I also want to be entering a trade with a uptrend on the candlesticks. Low, high, high, low, high, high. On the 1 minute, we have now reversed to the long side, which we hadn't done anywhere over here. And this is just sort of an accumulation phase of the whole move. Once we've broken and closed above the M15 high, that is our candlestick trend, of course. And I'll just explain that again. Low, high, higher low, higher high, and break and close. Now, it doesn't matter that we haven't broken that particularly. What matters is that we have broken the downtrend. High, low, lower high, lower low. Low, high, higher low, higher high, and close. This is swing 1. Swing 2, back to the open. Swing 3 is the close. The pullback, which is this tail here, is swing 4, an accumulation. Okay. In a perfect world, you wouldn't want, in a perfect world, that would be a lower high. High, low, lower high, lower low. Trading into a resistance level isn't the best thing in the world. So if you'd wanted to, you could have just put a high on there and waited until you'd closed above that high, which you did in this candle here. So you could have done the low, high, higher low, higher high and close just to be on the safe side. So what I'm trying to say is the perfect reversal would be singing the song and making sure this high here was lower than this one. But the power of the reversal overrides that most of the time, not all the time. So always just be patient and be safe until you've got much more experience under your belt, and then you can take these less perfect trades. So if you'd waited for swing 4 here, that red candle, nice and patiently, because remember it's real money you've got on the line, you can sing swing 1, swing 2, swing 3, pull back, swing 4, continuation. And the best way to enter that is just wait patiently for the 20 level to be broken, and look what happens the minute that does. We get the massive move. Okay, so this is why the histogram is a massively powerful additional tool in the toolbox, because we've actually done the bust and break as well. This was the bust out, swing 1, swing 2, swing 3. This was the accumulation phase. Notice nothing that was above the 20, and then when it finally does bust the 20, the price goes mad. It's like a coil, it's like a spring. The the big boys, in other words the institutions, are using their own money to actually build up discounted orders. Think of it as, say, using 5 million to sell, which creates a drop in price, selling off 5 million. They've made their profit because they were up here and they bought down here, and then they've used another 10 million to force the price up again, all those 10 million buy orders, and then they force it down again with a sell, and they've made a fortune, take profit up here, and then they drive the price in the direction they want it to go. And you know, you've got all these levels to use as targets. If you've taken it up to the H1, then from entry, which was there, that candle there, that's a good 33 pip move. If you just wanted to take it to an old support level, even that was a 10 pip move. The intermediate levels here, guys, are less important. I've mentioned this on another video as a question that needed answering. The intermediate levels are far less important than the reversal itself. As I explained earlier, the reversal, you cannot show me one in all this move down. Then we got overextended on the ADR, the reversal happened, triggered by the 30-minute histo alert. We don't enter willy-nilly, that's the whole point of this video. We draw our levels and we enter according to the lower time frame reversals. This was the initial pointer, then this, then the M15 reversal, then the trade. Okay, I hope that helps and doesn't confuse you. If there's any confusion, please ask questions. Thank you for watching. Have a good day.